एक फोल्डर कर लीजिए, एक फोल्डर कर लीजिए, चलिए फोल्डर में आप लिखिए वीडियो कर दीजिए, और एक फोल्डर होगा पीपीटी स्लाइड्स में।
Okay. Okay, I'm now going to talk to you about trustworthy AI in finance. So as I mentioned, I have a very large project portfolio. One of the projects that I've got is called the Framework for Responsible AI in Finance. And I'm going to talk about that right now. So just wait a second, because there's one or two people just missing. Then we'll... Right. Okay. We'll try. I'm just trying to see whether this will work. So this is a project on here, FAIR program. It's the Framework for Responsible AI in Finance, and it's funded by the UK government. In the UK, our funding for fundamental research, so blue skies research, is funded by something called the EPSRC, the Engineering and Physical Sciences Research Council. That is part of UK research and innovation. Yeah. So anybody who's coming to the UK at any point to do a postdoc, yeah, you need to be aware of this, because this is where people apply to get some funding. Yeah, so it's important to know that. In fact, it's always a question I ask at interview: do you know where to get funding? Because we try to encourage people to get funding. But this program, this partnership, is the Framework for Responsible AI in Finance. It's designed to create a world-leading capability in the UK for a company. So for this, we worked with HSBC. Yeah. So we were working with HSBC, wanted to use more AI, wanted to use it responsibly. So HSBC gave us £3 million. Yeah, don't know what that is in rupees, but it's a fair amount of money. So they gave us some money, and then Accenture, which is a large consulting firm in the UK, gave us about £1 million, and we were supported by the regulator in the UK, as well as some startups. So this project was to look at how can we really push on AI. So I mentioned already to you that AI is growing significantly, right? If I was to say, so there's great potential for AI in health and AI in finance, yeah, and also AI in entertainment. Do you think there'll be as much or as rapid growth in entertainment as there would be in finance, for example? What do you think? Which do you think would be more? Right, and why do you think that is?
Security concern in the case of finance, we have lots of security concern that can be considered financial system.
Yeah, one of the key things is regulation. It's if you're in a highly regulated space, yeah, you're going to have less AI, yeah. So actually, for example, this last week I was talking to the UK government about the risk of AI in what we call critical national infrastructure. So I mentioned that to you yesterday. Over the next 2-year period, it will not be a significant shift because of the developments in AI. Yeah, and the reason for that is while we've seen large language models being used by everybody, they're not really being used by regulated organizations. So in critical national infrastructure, yeah, for example, energy firms, they're very reluctant, yeah? They're reluctant because they're being responsible in one way, but more so they're reluctant because the regulators are very tight, yeah? So actually, you know, finance is heavily regulated. Within the UK, there is the Financial Regulator Authority, there is the Payment Services Authority, there is the Prudential Services, Bank of England, looking at how people perform. So you've got lots of regulation in the space. And that doesn't even include the fact that the Information Commissioner who looks at privacy of data is also very relevant, okay? So there's a lot of regulation, but still the AI in fintech market is going to grow significantly over a 5-year period, according to a recent survey, yeah? So the AI in fintech global market, so it's regulated everywhere in India as well, but was $14.8 billion in 2024. And that's expected in just 5 years to increase to around 3 times where that is. So that's 24% growth every single year. Okay. That may be a slight underestimate, but for a heavily regulated area, that is significant, right? So what is driving the difference? Why do banks want to employ AI? And this is an important thing because at the minute we're working with some banks and they want to pilot different AI, yeah? And which AI do they want to pilot? LLM. Everyone does, right? And sometimes I think the pilot is a good job, it's just a pilot because it costs a lot of money, and people are using an LLM where even a sort of linear regression would do just as well, right? So it's an important consideration to think about responsible AI. So in fact, let me touch on that now. So here's an important thing. So one thing I want you to be aware of is really think about the definitions that I've given you lately, right? Foundational identity, functional identity, yeah? Trust and trustworthiness, yeah? Think about those, security against privacy. I'm going to give you another thing that's quite important, right? Many people use the word trustworthy and responsible exactly the same, yeah? So, and you'll get more out of this if you think about this. So can someone tell me, I'm going to tell you that responsible AI and trustworthy AI are different. Yeah? Can anyone tell me why they might be different? Some people just use the same word and it's wrong for me. Why do we need these two different words? What do you think a difference might be between responsible AI and trustworthy AI? Let me tell you. Trustworthy AI, remember, is something about attributes within that AI that can make someone trusted, yeah? Responsible AI in finance, when I talk about that, what I mean is the responsible use of AI. Yeah, trustworthy AI is really about developing the AI and saying this is what it looks like, right? But responsible is not really about the developers of the AI, it's about the people who use the AI and install it. Yeah? So there's a slight nuance difference there about how you do it. So I think, I think what we do have to consider is how we responsibly use AI. Yeah? So, and if we are going to be responsible in our use of AI, one thing that doesn't come up quite enough is the cost of AI. So I'm going to tell you something now. That bottle of water is not very expensive, right? But I think it's, if I remember rightly, that much water will get you 3 queries in ChatGPT. Why will that get you 3 queries in ChatGPT? Because massive cooling required for LLMs. Yeah? So it costs significant. Not only is the cost of the money, but you need to cool these massive storage centers and compute centers, right? So we need to think, what is the real cost of deploying AI, right? That's responsible. That's not about trustworthiness, but that's responsible, right? It's responsible to think about the environmental impact of what you're doing, right? So imagine I have some model, yeah, and I can get, so let's say I want to predict something in finance. I want to predict, what is the likelihood that Somanath will come back in here in the next 5 minutes, yeah? And what I do is I run some kind of sort of mathematical thing, I just do a histogram, I do some linear regression, I say, 85% likely he's going to come back. Yeah, it's a likelihood, right? I don't know. I don't know if he will or not. We don't know until he comes. It's unknown at this point. It's a prediction. But let's say I said 85%, and sometimes it'll be right, sometimes it'll be wrong. Now, imagine I use an LLM instead, and it says, the chance of him coming back is 85.1%. Then what I've done, instead of doing something really simple, I've took something really complex, and maybe got an answer that tends to be right more often. But how much more often? What is the cost of that? So we have to think financially, and we have to think about environment and sustainability. And globally, there are a lot of ESG targets now, environment, sustainability, and governance, right? So what we've got to think about is what's our benefit, right? So what we're trying to do is, what's good to understand is, what they're looking for is a saving of between 200 billion and 340 billion, influencing 450 billion in revenue, right? So we've got to make sure if it's going to save, does it push the cost elsewhere, either financial cost or environmental cost? Yeah? And that is one of the things that will change over time as well, because people think, I'll save on staff. Yeah? But you don't save on staff costs straight away because you have to make people redundant and things, so it takes some time. So here's where we are on the investment. I don't have the sort of the cumulative growth rate, but this looks pretty linear anyway to me, right? So you're looking at around what, close to 25%, bit more, no, over 30% growth, yeah, of how much is invested in AI in the financial services sector. So, what kind of technology? So, one thing is that's interesting. So, I work with lots of banks on this, and what they hadn't realized is while we were talking about LLMs, there's lots of AI already in banks, yeah? They already do some machine learning, some expert systems, yeah? Natural language processing, some basic neural nets, and robotics process automation. This is doing things automatically, RPA, very well known, really helps drive down the cost of people doing manual tasks, yeah? So, where do we see things going that work quite well? So first of all, fraud detection, yeah? So you can get enhanced risk detection. You might apply some privacy enhancing technologies with that. Algorithmic trading, this is one of the things that has been very strong, is using predictive analytics for market insights, yeah? So these are some of the emerging positive kind of things that we're seeing where AI is being used and LLMs. Customer service. So famously, NatWest Bank in the UK has employed IBM Watson. So you may have heard of Watson. It's been around for a while. It's a sort of interactive thing. But now they've got a new greater tool. So actually, NatWest employs a direct conversation with customers. Who thinks that's a good idea? Think that's a good idea? No. If you don't, I agree with you because not many banks do it. You only need to ask Air Canada, yeah, who had a chatbot, yeah, who when the chatbot was running, somebody said, "Can I claim my ticket back if a family member dies?" Yeah, and the chatbot got the answer wrong. So the person didn't fly, cancelled their ticket, didn't get their 500 Canadian dollars back, and then said, "Right, I'm going to sue the company. You said I could." Yeah. So actually, it's a very complicated case. I won't go into all of the details because actually, was it quite right or not, and who was responsible? But it caused massive. The big thing is called massive reputational damage. So most won't do that, but I will tell you if it's not in the slides, ask me in a while and I'll tell you what a really innovative use of customer service, AI-powered chatbots in customer service. The other thing you can do is use credit risk assessment. So BERT is a well-known machine learning model, but it's been fine-trained on financial data to give financial sentiment analysis. What that helps us with, if you are going to create a loan or decide whether you're going to allow someone to invest, make an investment into something, what you want to do is look at the scour the internet and find out what do people think. Do people have confidence in the company? Is there any negative element? That negative element could be about one of the directors of the company. So Finbert is largely used, and I've used it myself, for financial sentiment analysis. It will basically say, instead of just summarizing the things, you could do that, it will basically say, is this a positive story about the company or a negative? And if you get too many negatives above a threshold that you decide, you don't use it. This actually works for individuals as well. Yeah, so if you have individuals and they want to invest some money and you are an investment broker, yeah, there are certain things that you have to check because you're not supposed to invest for people who are criminals. Yeah, remember, as I said yesterday, that is called customer screening process. Yeah, so it will take all the stories of that person off the internet, look at it and say, is this person got a strong reputation or a weak reputation? And that's exactly using the same Finber for financial sentiment analysis. But there are problems using AI, yeah? So sometimes you get discriminatory outcomes in credit scoring. So if you use an algorithm, yeah, and this is really about accountability. If you use a doctor or if you use a bank manager to decide if you get a loan or not, and you get refused, at least you feel that you can say that person did me bad, yeah? And it gives us, because of the way we are humans, that we say, okay, well, these things happen, you made a mistake or whatever, but we don't accept mistakes from algorithms, right? An algorithm can be inherently biased, yeah? So it might be because of your age or because of where you were born rather than anything about you now, that you might not get credits. You can also have data misuse, yeah? So if we rely on opaque models, so the ones that aren't transparent, yeah, we can have privacy violations. And with the algorithmic training that I mentioned here, there was famously a flash crash, yeah? So there are a couple of things you can do. If you've got some robo traders, yeah, and they're just looking for signals in the market, yeah, and what they do is decide to buy or sell, yeah? That's all very good because you can do all this predictive analytics. You can see and you can say that was a good investment, make more money. You're doing it very quickly. The problem is because it's so quick, yeah, you can have what's called a flash crash. And what happens essentially is an algorithm is making some decision on buying or selling, yeah? But when it makes that sale, it changes the market, right? Because you might release some shares. So if you release shares, there's more shares on the market, yeah? So supply of shares is greater, yeah? If the supply is greater, yeah, then the cost can fall because if there's only so much demand, right? So you've got a supply and demand kind of thing. So you release some shares, yeah, it'll drop a little. But what happens then is some other algorithmic thing is watching and goes, oh, they're selling their shares. It's dropping. I've noticed it start to drop a little. I'll sell my shares. And then the next one says, I'll sell my shares. They all start selling very quickly. And then you get those that weren't selling, these algorithms or the people that weren't selling to sell again. So you end up with these sort of flashes. The same thing with buying. If one says buy, you start to raise it up a little. Another one will say, hey, the shares are going up, I'll buy as well. Next share goes, I'll buy. Everyone's buying, you get a massive growth, yeah? And the problem with that is it's all good mathematically, but now you've got lots of shares that you've invested if you've come in quite high, and the value is not real, right? Because there isn't really that demand. You're not buying into it because you think it's a good investment. You're buying into it because the share price is going up. What happens is there will be a market alignment or adjustment because the market will go, well, that's completely wrong. And some people who are not algorithms will go, I'm going to sell it. Or the algorithm could say, I think it's already reached its top. I'm going to sell. And then it starts to sell and then they all sell, right? And it's one of those that, somebody can get pretty bitten at the end. So there's some bad things. So what we're seeing is the key areas where we're seeing positive changes are client experience. So AI that doesn't necessarily interact directly with you, but knows which products you might like. Yeah, helps you. We're working with a bank at the moment on, can we identify if you are somebody who keeps falling into vulnerable positions? How can we support them, give them a better experience? Financial crime, reducing that has worked well, so fraud, etc. and it's helping in risk management. But there is a problem about high-profile risks and significant delays because there's no coherent framework. Because what we have to do is use a risk-based method. Yeah, if you're going to invest some money in AI, and it's not inconsiderate, you know, I know you might use ChatGPT or similar for free, but it's not free for organizations, right? And it's not free for banks. So the thing is, if we don't have a coherent framework, then we're in some challenges, okay? And this was from surveys from the Financial Conduct Authority, the UK regulator, the Bank of England, and the World Economic Forum. So it said there's no clarity on how to drive innovation. So people just don't know. They want to innovate, but there's no framework for it, yeah? There are 150 different guidelines at the moment to deploy AI safe, ethically, and responsibly. And you see that's the right use of the term there, responsible AI. But there is no consensus currently. So our project is to develop scalable solutions for safe and trustworthy deployment of AI, underpinned by this, what I said to you before, foundational research. One thing we're doing and have done is developed a digital sandbox. If you want to develop trustworthy systems, yeah, I would advise to create some simulation environment, a sandbox, where you can test your system. These are very well known in sort of some high-risk areas, but it's increasingly for more areas where you create this digital sandbox, yeah, and you allow algorithms to run in a sort of simulated environment. So we're developing digital sandboxes that can help you validate your AI, test your AI, validate, test, and evaluate. So the things that we're doing, so look at this, you can see here about how this is responsible, but it's about creating methods to support trustworthiness as well, right? So enable robust and resilient data-driven decision-making. Develop privacy and security methods that provide safeguards against new risks. Deliver appropriate fairness and transparency algorithms addressing commercial, societal, and regulatory goals, and verify and certify black box models. So this certify is helping along the road to assurance. So they're the things that we're doing. I lead on this one, privacy and security. Yeah. We've got people from Oxford and Edinburgh on here. We've got people from Cambridge leading on here. And I think this is led by Oxford as well, if I remember rightly. So there's the partners. So it's University College London, as well as Warwick that I've mentioned, and Cambridge, Edinburgh, and Oxford I already mentioned. So here's a report that we did. So we started looking, when we got this work done, we started looking at LLMs in finance, right? So where's my machine learning chap? There you are, right? You'll know all of this, right? So LLMs, which happened about here, here, are not new. You know that, right? So LLMs actually, a long time ago, back in the 1960s, there were symbolic models and pattern matching. Then in the 80s, we got probabilistic models and corpus linguistics. We got some, I don't think it's on this slide here, but we also got some natural language processing. And some of the natural language processing actually still does as well as, I'm going to try and find the year that this was done. Got it on my notes, I think. So let me get the year. Yeah, oh, I don't have it. But around, I've just got down in the 80s, but here there was something called ELIZA, E-L-I-Z-A. Yeah, so check that out, ELIZA. But ELIZA was developed, what, 40 45 years ago or so, more, about 45 years ago. And it's still now, yeah, it's a probabilistic model, still does well on benchmarks compared to others. Yeah. So this is what I'm saying. Sometimes we don't need the brand new thing, but we had probabilistic models a long time ago. Neural unsupervised n-gram models started in the 2000s. I've got to say, around this time, 2000s, just before, just after, neural networks actually came in and they gained some popularity in the academic world. Yeah, I wrote a paper on neural networks, I think, and I think I published it as well. But actually, neural networks were not a good system to use. And the reason was there wasn't all of the support required. Yeah, because what you needed to do was they came back, they died a death, no one really looked at them. And then we got changes in architecture and compute power. And all of a sudden you had something called deep neural networks, yeah? Deep neural networks really changed because they could do, rather than doing 3 or 4 layers, now you'd have masses of layers, which you could never do because these are highly nonlinear, right? Because what you've got is between each layer, you've got these connections. So this is a really complex kind of model that you're playing with, right? So when we could start to do that, we found the performance significantly improved, yeah? And we got through to large language models just before the 2020s. And then we started getting these what are called transformer models that we use today very often. Yeah? So the real world use cases that we're seeing in finance are public communication and customer engagement, financial services safety, money economics related services, and financial insight generation. This being one of the biggest areas now. This is one thing with LLMs that we've got to understand is their ability largely to summarize data is very good. Yeah, that's one thing they do remain good at. But you may have heard that Apple brought out a summarization tool of news. And within the first couple of days, the BBC wrote a formal complaint because it got the information wrong. Okay? And that's Apple on their model. Okay. At the application, so what you've got is use cases at the end about what you're trying to do. And then you've got an application layer, which is something like Microsoft Copilot, which I think is even on the phone that Somanath has lent me, ChatGPT. But below that is actually the model level, okay? So you've got the level which is Bloomberg GPT, for example, FinGPT or FinMA. Yeah, so it's not the bit that you would interact with, but it's actually the model. Some are closed source, some are open. But what you need beneath it is this high performance kind of network, this infrastructure that's needed. Okay, so these are the key opportunities that we can see of applying LLMs in finance. The broader opportunities are around streamlining decision making. That's the key thing. What's going to happen to drive down costs is around streamlined decision making processes. One thing is that you can reduce costs using AI, and that's reasonable, but your employees won't be happy. But one thing that you can do is do more with the same. That's what the real driver would be, to get greater growth rather than just drive down costs. Because costs have got a minimum that they can go down to anywhere, but growth could have a far wider range. So here are the risks that we found in LLMs in finance. So some were related to the data, so bias in the data that you had, privacy leakage, data transparency and security, and violation of intellectual property. That's one thing that we've seen before, where, for example, Bloomberg GPT is trained on Bloomberg data. Yeah. That's data that is very expensive to gather and curate. Now, what they have to be careful of is that they're not releasing some of that information to people who are creating general queries on it, yeah? Especially if you leak it at scale. There are problems around the complexity errors and susceptibility to some attacks, and you get social behaviors and human values such as alignment. Alignment means, does the AI try to align with societal goals? So we're trying to do that, but actually there's going to be major challenges in understanding that the alignment, how do we make sure alignment globally doesn't contradict local alignment? And that's geographically, but also in a task. Yeah, so it's easy to confuse an AI into what its ultimate goal, because its ultimate goal is to give you the right answer. It's got some guardrails, but how do you confuse it and say, well, actually, no, this is more important, and it's trying to conflict with what do I do about my guardrail and what do I do about what you really want, and how can I can't satisfy both, so I'll satisfy a bit, and you can confuse it. Here we've got toxic linguistics. So the Microsoft Taybot is very famous because that chatbot, within I think less than a day, started swearing and being racist. And you've got environmental impacts that are see the kind of people we've got here, people from the Bank of England, the Financial Conduct Authority, from University of Warwick, the Turing Institute, etc. Standard Chartered, also there. So these are the things that we need to do to make sure that we get safe adoption. We need robustness and resilience. We need to address data asymmetry. So at the moment, there's those who have data and those who don't. That's data asymmetry. How do we overcome that challenge of data asymmetry to make sure that data is not a barrier? Security, privacy, fairness, explainability. And this is the results of the survey, right? This isn't just what I've told you. It just so happens that people said these are the most important things. And you can see how much of it overlaps with the work that we do at the Turing and at Warwick. Yeah. So robustness and resilience can be challenging. Yeah. But what we have is many services have got strict robustness checklists, right? So this is about the service, not about the AI. So how do we translate that? Those robustness is very much use case dependent. So for some, it's easy to evaluate, and for others, it's much more difficult. Yeah. What we definitely found is that human monitoring and red teaming activities with diverse teams is essential to achieving robustness. What that's saying is, don't let the AI go off on its own. If you want it to be robust, leave the human in the loop for a while, because they can check, right? So remember what I said about robustness. Does it work well with different data? Well, the human can help be the judge of that, okay? So we are getting a much more working agentic AI, where AI will judge other AI. But for now, human monitoring and red teaming, so trying to have exercises where you try to examine potential flaws are becoming really important. There's concern definitely about the Financial Conduct Authority that those with lots of data will be able to do good things and drive down costs, but those that don't have data will struggle. Open banking might help that, yeah. Sharing data is, especially if they don't use pets, could cause some reputational and legal risks. But there was a big call which said, can the government provide data sets to support data sharing. One thing we're doing with the Financial Conduct Authority is creating a synthetic data set that we're going to release to the whole community so that they can test their algorithms. Security, now, if you look here, do you remember that diagram that I showed you about biometrics? I'll give you a copy of these slides so you don't need to worry. But what we do is we look at where are the various attack points, yeah? So here you've got sensitive information disclosure there. This is actually based upon the OWASP top 10, if I remember rightly, yeah? So prompt injection is in fact, it's the OWASP themselves applied it to large language models. It's not that we've applied, but we've just looked at this pipeline and applied it into this model. Privacy. One thing was that we found in the workshops was that evaluation frameworks need re-evaluation, yeah, and assurance techniques, privacy assurance techniques, giving you some guarantees, are gaining more importance. In fairness, we've got a pipeline. So here, the key thing to take away is look at all these areas where fairness can become an issue. So the first thing is confirmation bias. We have some bias. We run some AI and it gives back what we thought, so we think it's all good. But that is confirmation bias. There can be historical bias in your data set. Yeah. So it may be that in your data set, people of a certain category have never had loans, so you think, oh, that's correct. They shouldn't have loans. Yeah. There's an evaluation bias for when you look at to see how well the AI is done. You might be biased in when you evaluate it. You can have a selection bias and representation bias at the end. So we've run some. This is a project run out of the Alan Turing Institute. So we've looked at financial sentiment analysis model to look at different models. So do we get different behavior when the prompt has an explicit input about country level information? So what we say is, will a model that says about the financial sentiment, if we change it from pounds to rupees, but everything else is the same, will it say it's a negative report or a positive? It shouldn't change, right? Whether the value reported, it shouldn't really change the news, whether it's from in India or in the UK, right? But what we found is it definitely does make a difference, yeah? Now, some people argued, when we spoke to government, they said, well, you know, if a country, you know, a company is from Nigeria, maybe we should suspect it less. We should suspect it more. And that just made me think, that's biased, right? You're not being objective. Now, you can put into a weight, but you have to be pretty clear about how much you're going to say. How much of an influence does it have, the fact that it's Nigerian? So, you know, it just confirms some of the challenges for me around that confirmation bias. Having accurate but intuitively explainable models is important, more important than having complete explainability. This is important. Around this trustworthiness, there's no point having a model that's really explainable and you understand how it all works, but it's rubbish. Yeah, you've got to get that balance. I think it's irresponsible to have something that is really accurate, but gives you no idea why it did it. Yeah, actually, it's not so good anyway, because you don't know if it will work well in a completely different scenario. But it's no point just being explainable if it isn't accurate. So you want intuitively explainable. Auditability is important, and training and attention to detail. Accountability and transparency, again, is linked to customer trust, yeah? And you've seen this before, re-evaluation of risk assessment frameworks is critical. I'm going to skip over those two and go to this final slide, because we're upon time. So one thing is collaboration, sharing best practices and defining levels of granularity are really important. We need to collaborate more. We need to share best practice, and we need to understand levels of granularity if we're going to develop sector-wide analyses of LLMs assessments. Yeah. Despite the privacy and security concerns, open model and data practices can bring diverse expertise. So this has come up for me in another context at the moment. Should we have open models and open source? Yeah. And the answer is, you know, if you look at DeepSeek, DeepSeek has said, you know, if it wasn't for some of the open large language models, yeah, from the likes of Meta and others, and Google, then you wouldn't have that change where reinforcement learning has been something that's really changed the capability of large language models. So it was recognized in our workshops that despite security and privacy concerns, that this was seen as a very positive route forward. Right, I think I will stop there. There is something around trying to understand assurance, and I would advise you, if you're interested in AI assurance, really important, there are 3 great pieces of work. So model AI governance framework for generative AI, the AI risk management framework, AI RMF, and this was from Japan, if I remember rightly. That looks Japanese, yeah. AI guidelines for business version 1.0. So here are 3 really good resources around AI governance. Oh, and the UK is doing some work itself as well. Okay, I will stop there. Any questions? Okay, if there's no questions, I will see. Oh, sorry, did you want that? Which did you want? So this is really quite recent. This was oh, it's a year ago now. Okay. I will leave you this afternoon with Professor Tripathy, and I will be delivering 4 lectures to you tomorrow. Starting with, let me see what I'm starting with. I will start with trustworthy transport and mobility in the morning. Okay. Thank you.